detailing what is a strong quarter this time around. What we actually saw was a revenue growth of almost 20% as against street expectations of 12%, and that was led by a 6% underlying volume growth. The street was bracing itself for a volume growth of anywhere between 2 to 3%. There were multiple factors why the expectation of volumes were just 2 to 3%. As you can see on the screen, the base was a 9% growth. The company has taken a price hike of almost 12% and that reflected in the company's demand, or that would have been expected to impact their demand. And finally, there was a fair amount of shrinkage in their grammage, or something which is for 100 grams, selling 90 grams of that could impact their volumes. But be that as it may, the company has gone ahead and performed much better than street expectations, the standalone revenue that is. As far as the EBITDA is concerned as well, 3,240 odd crores, that beats street expectations of 3,100 crores. Margins coming in at 22.7%. Yes, there has been a gross margin and an EBITDA margin compression both year on year as well as quarter on quarter, but that again is something that the street was expecting and the management was alluding to as well, as a 20% inflation that took place in their first quarter for their raw material basket. The net profit as a result of which coming in at 2,289 crores versus expectations of 2,175 crores. That too is above expectations. What actually missed expectations, and the management did allude to that, was foods and refreshments. That actually grew by just around 9.3%, but there they said that it's because of deflation in tea prices that the value number is much lower. The volumes are rather strong out there. So across the board, there has been a beat. The only thing that the street would have liked a little more is a little more optimism from the management as far as commentary is concerned, because they're saying that maybe the margin pressure could continue into the second quarter before finally easing. And if there are all the triggers that in place with regards to monsoon, as well as some more sops coming in for the consumers in terms of better prices or lower inflation, only then can demand improve. But all of that is for the second half of this year. So that's about HUL's numbers. Let's welcome our panel of analysts as well. We have Kaustup Pavaskar, the research analyst at Sharekhan. We also have Sanjay Manyal from ICICIdirect joining in. Sanjay, first thoughts as far as these numbers are concerned. Reported numbers look much better than expected, but the commentary could have been a little more optimistic.
Yes, I think numbers what we were estimating was somewhere around 14% kind of a growth, and it came at 19%. 6% is a volume growth, a pretty decent number. But we need to understand a few factors over here. One, again, the base quarter was impacted by the COVID. Simultaneously, if we just segregate the results in the segments, home care, no doubt, has done significantly well. It has grown at 30% kind of a level. But what we believe that beauty and personal care is still at 17% kind of growth is below par. Given the fact that it was significantly impacted in the base quarter. We don't know the volume numbers segment-wise, but we believe probably it as the personal beauty and personal care business also would have faced the lackluster kind of a growth, given the fact that palm oil prices again would have led to the price growth in the segment. So I think home care no doubt significantly done well, and beauty and personal care we believe probably still below means below par what they used to do earlier. Yes, commentary, what we understand probably I still believe that probably Q2 operating level margins might be rather better than Q1, and certainly volume growth will come back in the second half. Even if there is an inventory level of 12 to 14 weeks, which management has mentioned, I think that high cost inventory should be exhausted in July, and August and September should rather see a low cost inventory in terms of palm and some of the other commodities which have seen correction.
So at FY24 earnings, maybe 45 would be your EPS estimate. Where do you think it will go from here? And the stock has rallied about 35% from its lows, 15% of that in this month itself. Do you think there is more juice?
We still believe that again the FMCG stocks, most of the FMCG stocks, specifically the MNC stocks, are trading at a premium valuation, and we believe that the current valuation really takes the positive, most of the positive which probably we'll see next few quarters. We had a hold rating on the stock, though we'll be revising or we will be reviewing our rating after the con call. But largely we believe that valuation multiples are still at the premium level.
Kaustubh, what is your takeaway from these numbers for HUL been?
Certainly strong set of numbers higher than what we on street were anticipating for the quarter. 6% volume growth was much better than what we were anticipating at around 2 to 3%. Important point over here, Mangalam, is that in the management commentary also they have mentioned that they have been consistently gaining the market share. So if we go into past 3 quarters, HUL has been consistently gaining market share in 75 to 80% of its portfolio. So that is something which we need to factor in, because when there is a recovery in the overall demand environment, like if the green shoots work out well for the company, I think HUL will be the key beneficiary, considering its portfolio, considering its deep penetration, distribution reach, and its strong footprints into the rural market. So I think this volume growth trajectory will further improve in the second half of the year, and that will help overall HUL to deliver good set of numbers. In terms of the revenue growth as well, I expect that company will not pass on immediately whatever benefits they are getting in terms of the raw material deflation. So they will be keenly monitoring the raw material price momentum in the quarters, in the months ahead. And once they see that raw material prices have stabilized, I think then they will start passing on the benefits to the consumers in the form of price cuts or damage improvement, or some kind of promotional add-ons which will help them to see recovery in the volumes. So I believe that second half of the year is going to be important for HUL, and I firmly believe that they will see a good recovery in terms of volume as well as in terms of margins in the second half of the year. In quarter 2, I believe that margins would be more or less flat on sequential basis if raw material prices stabilize at the current level.
Well, at the outside, what would you think, Sanjay, the second half volumes could be? Because we're also looking at a more favorable base then. In the second half, Q3 you have a base of 2%, in the fourth quarter you have a base of 0%. Is there a chance that the volumes could actually hit anywhere between 8 to 10% mark in the second half? And in that, what would your full year estimate for volumes be after this 6%?
No, so we don't believe that it can be 8 to 10% kind of a volume growth. We still believe anywhere between 6 to 7% could be the volume growth even for the full year perspective. We need to understand one factor where that 6% volume growth has been in this quarter has been on a lower base. Means if last 2 years base impact was much lower. So we strongly believe that 6 to 7% is something which probably one can take. 10% is a bit far-fetched.
Does the stock move higher tomorrow or lower on these numbers?
Can you repeat your question?
Does the stock move higher tomorrow or lower on these numbers?
No, I'm still not been able to hear you.
Okay, we'll try this with Kaustubh. Kaustubh, what do you think the stock does tomorrow on these numbers?
I think numbers are very strong, so but a little bit cautious on the outlook from near-term outlook front. But I believe that the medium to long-term growth prospect for each other are intact, and we have seen a good recovery in the last 15 to 20 days when the commodity deflation have been seen in the market. So I guess the near-term pressure on the margins and volumes have been factored in. So I believe that the second half would give us the clear indication how the sector or these large companies would be performing. But I believe that these are really good set of numbers, and stock should perform.
All right, Kaustubh, Sanjay, thank you so much for joining in, giving us your analysis on HUL's numbers. Both of them saying that maybe the second half of this year is something that we will watch out for in terms of both demand recovery as well as commodity deflation or lowering of the commodity inflation coming by and playing out in their margins. But there you have it, the screen on, the numbers on your screen and the color on your screen as well. If you've just tuned in, Hindustan Unilever has delivered in the first quarter of FY23. Revenues coming in at 14,270 crores, as against street expectations of 13,350 crores. The EBITDA coming in at 3,250 odd crores. The street was working with a number of 3,100 crores, and as a result of which the net profit has grown over or rather slightly under 2,300 crores when the street was working with a number of 2,150 to 2,175 crores. 6% underlying volume growth the stock and the company has delivered. Thank you for tuning in.